One thing I've noticed is that people who trade on Phemex are amazing. They tend to get a lot of things right. So I'm always a little wary when I'm being paid for a long or a short, right? That means I'm going against the general trend. In this case, ever since up here, they've been paying me to go short. And I've been a little nervous about it. I'm not going to lie. But I've obviously been correct. So why is everybody going long? I don't know. But I don't see Bitcoin rocketing up anytime soon. So that's just weird to me. But why do I mention that? Positive open interest means a lot of longs are getting set. There's probably a lot of longs here in this complex correction. We took quite a long time to consolidate. What is a complex correction? Those of you who are subscribed will know one of the aspects of a complex correction is it gives buyers and sellers the time to accumulate their orders, okay? And so if there's a lot of long positions over the course of this complex correction that lasted 16 hours, if this breaks to the downside, which they may not foresee, right? They're probably waiting for a bounce to the upside. We're going to have a long squeeze, meaning lots of stops and liquidations get hit and the price rallies quickly to the downside. That's why I'm seeing an extended fifth wave, okay? An extended fifth wave. Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 5th, 2022, and Bitcoin is looking like it's in a clear downtrend, okay? We are experiencing a dump as we correctly called on yesterday's episode, right? But it's just the beginning, okay? And I want to take a stab at tracking this downtrend by mapping out highly probable Elliott Wave sequences that this this downtrend can follow. So if you're interested in where the next bounce will be, where to possibly get in on this bounce, or rather, where to possibly get in on this trade if you're still not in a short, or if you're interested in finding out where we could finally find some relief, bless you, Nicola, then watch until the very end. All right. So I'm on the hourly time frame. Actually, let's zoom out to the daily because I want to show you one thing. Okay, I've got some trend lines in, and why did I put these trend lines in? Very simply, this price action that you see here can be confined to these two trend lines. So I got a rising sort of line of support here, which is my bottom trend line, right? I've got 2 touch points, so that's a legitimate trend line. And then I got a top bar here that served as resistance, support, actually support here, resistance here, and obviously resistance here. So my top trend line is at approximately 45K, 45.4, something like that. And then my rising bottom trend line is rising. So there's no particular price point, but we may hit it. It's likely we hit it at around 35K, right? A little under 35K, 34.5, something like that. Okay, just for a bit of context, now let's zoom back into the hourly. All right. One thing I don't particularly like about Elliotticians, I love Elliotticians, I'm an Elliottician myself, but Elliott Wave analysis and the way it's kind of developed is it's extremely complex sometimes to follow people's analysis. They got a million different possibilities and probable outcomes, and you have this count and that count and the third. I can't do it like that because if I'm trading, I need to decide on one probability and go with that. I can't, both trade long and short. I know some people do that, but I'm not that kind of trader. So I like to just pick something, right or wrong, and go with it and use good risk management. So you'll see on the screen here, I've got 3 different counts. They're not different, actually. They're the same. But when you're dealing with a large range, like a big kind of drop, right, that encompasses quite a bit of price action, which I think this one will, right? I think we're going from all the way from 45K down to the 30s, early 30s, right? Maybe even lower than 30. So it's not going to be as simple as 1, 2, 3, 4, 5, right? This impulse, and remember, if you're subscribed to the channel, you'll know why are we in impulse? Why am I seeing an impulse? Very simply because I'm seeing this as an A wave, initial break of structure for a 73-day downtrend. This flat correction is leg 1 of 3 of our B wave. A B wave is essentially a counter trend to an A wave. Okay, so if you think of an A wave as a break of trend, break of structure, a B wave is essentially just a counter to the A wave. That's all it is, right? And it can go from between the 0.5 to the 1618 of the A wave. All right, a flat correction goes minimum to the 786 of the A wave and to maximum of a 1618, okay? So that's what we're dealing with here. This is leg 1 of 3. This was leg 2 of 3. And then leg 3 of 3 in a 335 flat correction is totally impulsive. This is why I said that we were getting an impulse. This is why I'm seeing an impulse, all right? Now, let's get into the impulse per se. We've got these 3 lines, okay? The yellow is the largest count, okay? That is basically what I'm seeing, that's the main count. The blue and the purple are sub-counts, okay? And these sub-counts are important because we're basically using this as a map. And one thing I try to do, in when I'm counting waves is I try, especially as trends form, I try not to rely on them too much. Okay, I want a map, I want a guide for the trend, but I don't want to be overly confident because it's easy to make mistakes, and I don't want to necessarily rely too much on this kind of analysis that's not highly, it doesn't have a high hit rate, right? Trying to map out a trend while it's going on, and if you rely too much on that without and you're blindsided, and you think kind of your analysis is, if you're too reliant, if you're too confident in your count, it could cause you to make big mistakes. So I just want to preface this as in that way. Just be very careful, right? Counting waves as a trend forms is complex. But overnight, I had an epiphany, and I just woke up and I had this idea. Here's the idea. I'm going to nest my count. Okay, what does that mean? All right, let me hide the yellow and blue lines first, and I'm going to show you what I mean. So basically, I'm trying to simplify all of this by just doing one thing at a time. All right, see what I know and counting that. Okay, what I'm seeing right here is clearly 1, 2, 3, 4, 5. Okay, I can count 5 waves in 3. 1, 2, 3, 4, 5. Right. I can count this wave 4 complex correction, a WXYXZ that's breaking down, and I can count this as the a 2 wave. Okay, it's very easy to count the 2 waves or the wave 2s because they're the first that happen, and they offer the most retracement, right? A wave 2 correction corrects between 382 and 618 of wave 1. Wave 4 only corrects between 236 and 382, so they're harder to spot in a larger trend. So I've caught this wave 2. Basically, this is a wave 2, this is a wave 2, and this is a wave 2. That's why I have 3 different lines, because there are 3 different 5 wave sequences going on. Please don't lose me. If you're interested in Elliott Wave analysis, this is really helpful. I think this is going to take my analysis to another level. right? So please follow if you're interested in Elliott wave theory, Elliott wave analysis, if you like counting waves, right? I'm going to try to be as clear as possible in this explanation. So this is 1, 2, 3, 4, 5. That's what I'm seeing, okay? Now, why did I get this and why am I so sure of this? Okay, we're at the top of our trend. If we have a breakdown in it, this is going to be an impulse. Basically, this has to be 1 and this has to be 2, okay? Whatever comes after this is 3 in the larger trend, okay? So that's the premise for the yellow line. This has to be 1, this has to be 2 for some kind of impulse. That's the blue line. And then this has to be 1 and 2 for the purple line, obviously. And after that, there's no more 1 and 2s because you see the minimum retracement of 382 isn't met. I hope that's clear, all right? And so now let me put the yellow and blue lines back in. And now hopefully you can see why I did what I did. And look at the purple line, that's a clear 1, 2, 3, 4, 5 count. So instead of trying to count everything from the outside in, it's easier to do inside out, dealing with one count at a time. And so once we have the purple line complete, it'll serve as the master key for the blue line and the yellow line. So right now, it's tentative as to what will happen in the blue line, but we're close to completion in the purple line because we're in a wave 4 correction. We have a simple wave 2 correction and a complex wave 4 correction, okay? And so what I'm seeing is that now this is a regular kind of 1, 2, 3. This 3 wave came between the 1618 and the 2 Fibonacci extension of the 1 wave. So no extended waves just yet. However, I believe that this wave 5 is going to be extended. Why? First and foremost, we have a positive open interest. What does that mean? That means they're paying me to short. They have been paying me to short ever since up here we broke crucial support. And for those of you who subscribe to the channel, you'll know one of my tricks is I look at open interest because I use Phemex to trade. If you want to use Phemex, there's links in the description, whatever. Use my referral link. I don't care if you do, I don't care if you don't, but it's a great exchange. I like it. One thing I've noticed is that people who trade on Phemex are amazing. They tend to get a lot of things right. So I'm always a little wary when I'm being paid for a long or a short, right? That means I'm going against the general trend. In this case, ever since up here, they've been paying me to go short. And I've been a little nervous about it. I'm not going to lie. But I've obviously been correct. So why is everybody going long? I don't know. But I don't see Bitcoin rocketing up anytime soon. So that's just weird to me. But why do I mention that? Positive open interest means a lot of longs are getting set. There's probably a lot of longs here in this complex correction. We took quite a long time to consolidate. What is a complex correction? Those of you who are subscribed will know one of the aspects of a complex correction is it gives buyers and sellers the time to accumulate their orders, okay? And so if there's a lot of long positions over the course of this complex correction that lasted 16 hours, if this breaks to the downside, which they may not foresee, right? They're probably waiting for a bounce to the upside. We're going to have a long squeeze, meaning lots of stops and liquidations get hit and the price rallies quickly to the downside. That's why I'm seeing an extended fifth wave, okay? An extended fifth wave. Also, I'm seeing an extended fifth wave because my general premise to this dump is first and foremost that we have very little support below this level of 34, 35K. And I think we break 34, 35K, 33K, and we test the 30 to 31K regions or thereabouts. So that's the premise. Also, it's an impulse, and we haven't tested those regions right now. So if we do simple Fibonacci extension of the A wave, retracement of the B wave, we see that the 1 to 1236 is where usually the C wave ends, and that's between 32 and 34. So our sort of overall analysis is consistent with that general principle that the C wave extends to between the 1 and the 1, 2, 3, 6 of your A wave and retracement of the B wave. Okay, so that's why I think we're going to get an extended wave 5. If we get a simple wave 5, we simply are going to get the inverse 1618 of this wave 4, which is 38K, okay? If we get a simple wave 5, that extends to inverse 1618 of wave 4, we get 38K. Extended, we probably get something like 36.5. I think 36.5 is likely. If I'm looking at the chart, I see support at 36.5 right here, right? I see 36K or 36.5 being support, right? I'm seeing it here. I think that's likely. I think the extended wave 5 thesis is likely. Okay. Once we get an extended wave 5, what can you expect? Now let's go to the blue line because the purple line will be complete. That's our master key for this count, all right? The purple line basically shows 5 waves. That blue line tells us that those 5 waves in the purple line is an extended wave 3. Typically, you get extensions of wave 3 or wave 5. According to Elliott Wave theory, you cannot get multiple extensions. So if you get an extension in wave 5, you can't have also an extension in wave 3. If you get an extension in wave 3 in the blue line, you cannot have an extension in wave 5. I think that's why we get a wave 3 extension, right, in blue wave, and then we bounce up for our wave 4, right? And our wave 4 bounce can go to a maximum of 382. So if you're not yet in this trend, I think it would be a great opportunity to get in at the height of wave 4. That's a 6% bounce if we do get that bounce. And I think it's likely because, right, we have support right here and we have resistance right up here where we just formed it in this complex correction, right? And if you look laterally, if you look left, you see a bunch of price action in this region. So I wouldn't be surprised if we bounced up and down and consolidated in this region like so, right? If we spent some time in that region for those reasons, okay? So you bounce between the 236 and the 382 of this extended wave 3. That's going to be your wave 4 correction of your blue wave. And then a regular wave 5 takes you to the bottom of this trend line that I drew up, this ascending trend line, which would be around 34.6, okay? And that is your wave 3 of your yellow line, okay? Then you get another bounce, which basically all these bounces means consolidation in this area once again. So at the end of the day, you're going to get something that looks like this, just like you have here. Do you see that symmetry? The chart is beautiful. The chart is symmetric, typically, right? That's the norm. It's very odd and very it's you seldom see a chart that doesn't have symmetry. It's just like in nature, you see symmetry, you see balance, same as in charts. So this theory for me holds. It seems possible and probable just based off of the aesthetics, okay? Chart aesthetics. Now, we end up here, and finally, we get a regular wave 5, which again is the inverse 1618. Now, we cannot get an extended wave 5 in the case of this, in the yellow line, in the case of this count. Why? Because wave 3 is extended beyond the 2 extension of wave 1. All right, let's just prove that to ourselves really quickly. I hope I haven't lost you all. If what I'm saying is gibberish, you may need to brush up on your Elliott Wave theory principles, right? The book Elliott Waves Made Simple is my favorite recommendation for that kind of work. There's a link to that book on Amazon in the description. If you use that link, you support the channel. Anyway, so I go Fibonacci extension of wave 1, retracement of wave 2. You see that wave 3 will have been a 4618 extension, right? Typically, the extension of wave 3 is between 1618 and 2. So that's an extended wave 3 in the yellow line, our larger count. And then a wave 4 retracement, a regular wave 5. This would give you a final price of 32,561, which is around 33K. Okay, so that gives you, and then you have your kind of your reversal pattern, which takes you down a little more. So between 30 and 32K would be where price finally finds support, okay, in this scenario. Again, this is all probabilistic. I'm not going to put a bunch of money and say price is exactly going to happen this way. This is just giving me a general map to trade in the coming days, okay? And this is the power of Elliott Wave theory. I don't think any other sort of any other system in crypto, or why am I talking about crypto? Any other system in charting affords this sort of clarity, this contextual clarity. All right. If you get value from these kinds of analyses, right or wrong, like the video, share with others who you also think may also gain value from sound technical analysis, and subscribe to the channel. We love to have you. This is a thriving community of traders. And trade safe, my friends. Keep your losses small and your wins big, and I'll see you guys tomorrow.